Most contractors think with they've got money in the bank, they're doing fine. But here's the truth. If you don't have a good and proper bookkeeping system in place, you're probably bleeding cash and don't even realize it. I've seen contractors doing millions of dollars in sales and still struggling to pay themselves and wondering where'd the money go. So in this video, I'm going to be walking you through the exact systems that we use to help you fix that fast. All right, so as we get started here, I'm going to be talking about benefits and pitfalls, and then we'll be moving into how to set up the system and just overhaul your whole financial process and system to make sure you're making good money and you're aware of the numbers, you know your numbers. The big benefit or the big pitfall, depending on which way you want to look at it, is if you don't have a good system in place, you're not watching your numbers, you are sailing blind. You don't know what's happening in your business, you don't know where the numbers are at. You can't make proper decisions of should I hire someone? Should we invest in a consultant or a coach or a marketer or some new website, whatever it may be. So if you're just looking at your bank account and making decisions on the fly, that is not a way to manage a business. And that's going to get you into troubled waters and you're sailing blind essentially because you have no idea how the financial landscape looks for your business and projecting to make proper decisions. Having good bookkeeping in place as well is going to save you money. So just by being able to look at the numbers, review them regularly, you're going to notice things in your overhead, in your subscriptions that you're doing, in certain jobs and types of projects. Once you have the right tracking in place, you're going to be able to have a just like that matrix, Neil looking through the matrix of like, okay, this is what we're spending too much here, or this can be tightened up. Maybe we need to invest here because we don't have any budget in place. It'll give you this perception, this ability to manage a business much better, and you'll save you a lot of money in the long run. One thing other people that don't have a good system in place often don't realize is that the client perception is affected as well. When you have a good financial system, you have this kind of air about you that your books are in order, you've got a process, and clients are gonna realize that you're invoicing regularly. It's just going to give you a professional feel with the client, and there's actually a client benefit to this as well beyond just you and your internal business. And then finally, it's going to help get you rich. How many really wealthy, successful people do you feel do not know their numbers? If you've ever watched Shark Tank, something like that, they're going to dive into the numbers right away. They want to know any business they're going to invest with because they're very successful. What are the numbers? What's happening in the business, because numbers don't lie. And if a business owner doesn't have that level of acumen and just wherewithal of what's happening, they're going to fall apart. The business is going to be crazy. You're probably maybe experiencing this already with just not being able to manage your numbers. So that is the benefits and pitfalls. Moving on to number two here. So point number two is automation. If you're like me, I don't want to do anything if I don't have to. So if I can automate it, if I can delegate it, all the better. You may have thought this before, depending where you are in your journey. But if you're still doing your own bookkeeping, or if you're starting out, get a bookkeeper as soon as possible. And if you've got a bookkeeper who's maybe just not that great, look for a different one. You need a bookkeeper that knows what they're doing beyond just being able to manage the books. They should have an ability to know how the numbers are influencing, and maybe not be like a financial advisor, but they should be able to advise you to some degree, or at least pinpoint areas in the business that look a little bit out of place. So you definitely want to hire a bookkeeper and get this off your plate as soon as possible. And then you're going to have an admin person who's probably going to be handling a lot of this system as well, because the admin person will probably do the cost coding and some of that tracking. They may be putting information for new clients in or invoicing. So there's certain things that the bookkeeper is going to do, and then you're probably going to need an internal admin person because they're going to be more closely in tune with the business, the customers, the projects, and what's going on. So that's going to be kind of the team that's going to manage the bookkeeping financial side of the business. You should be connecting all your bank accounts with your bookkeeping software. I like to use QuickBooks. Majority of my clients use QuickBooks. I've had some who have been on Xero or Sage. So all of them kind of do the same thing. I like QuickBooks. It's just sort of the gold standard. Everyone's sort of familiar with it. But any of them, you can connect your bank accounts, your credit cards, any kind of financial data that you can integrate into the software. Do that right away. You should not be pulling anything manually or exporting PDFs and importing them here. it should all be linked and connected, and there's lots of ways to do that nowadays. Receipts is another one that can be automated, where you will still need someone to manually, put in the receipt or snap a picture, things like that. But as far as the information going from the person to the software, that should all be automated. And most project management type softwares out there have this ability. Any kind of bookkeeping software has this ability. Take a picture, categorize it, send it off. I'll be going over the exact sort of flow of the financial information a little bit later, but there's ways to do this with your email too. If you've got a subscription or a vendor, they're going to send you a bill, invoice, receipt, whatever it may be to your inbox, into your email. You can set up a filter and an automation with inside Gmail, probably, any of these other emails if you're using something different, that will automatically recognize the word receipt or will recognize the word payment, whatever it may be, and it'll automatically send that off to your bookkeeping software so that it goes into software automatically. So there are lots of good ways to do this, lots of automations nowadays to set this up. No reason to be doing this manually and wasting time. You want to streamline this. It'll save you money, save you time. So definitely want to get that set up. The other thing that you can start to do with automation, it's not like it's 100% automated, but you can now do time tracking very easily and conveniently with most project management software. There's also certain kind of construction apps that will geofence, so guys will automatically get clocked in to a job, or at the very least they can have the app on their phone, they put in their hours and it goes directly into the software for your bookkeeping. So all the expenses, all the time, everything's getting tracked and funneled into the bookkeeping software, and then you got your bookkeeper and your admin to process and handle that. Concept is easy, application not so much. So this is where we're going to move into the next section here of like, how do we actually set this up and what does it look like? All right, moving on to point number 3 here, financial flow. So with pretty much every type of business system, you're going to have some sort of flow of information, flow of process, steps 1, 2, 3, 4. This is the way that I've found works best for clients. There's maybe some other ways to do it, but essentially you want to get an email address that is specifically for your accounting. So if you're XYZ Contracting, you want an accounting at xyzcontracting.com. And any sort of financial data gets sent to this email address. So any receipts, payments, any kind of emails coming into your inbox, your project manager's inbox, your admin's inbox, there should be filters that automatically send them to the accounting at yourcompany.com email so that all the financial data is going there. Also, your guys on site, if you've got carpenter on site, he's worked 8 hours today at Miss Smith's project, he did framing, he should be writing an email and, or sorry, if he if he purchases something for that project, we'll get to the payroll in a second. But if he's purchased something for that project, he's off at Home Depot, Rona, whatever, and he can take a picture of the receipt. It can then get sent to that email address, and in the subject line, he will put Miss Smith project, framing lumber, or framing materials or something like that. So now you know which project is for, you know which cost code is for very easily. You don't have to go hunting through the receipt. That gets sent to the accounting email, and now your admin person is going to be monitoring that email. Depending on how many transactions you get a day, that it could be every day, twice a day, maybe twice a week, whatever makes sense. They're going to be processing those emails that come into that inbox. And most of them will get automatically forwarded to your bookkeeping software so that now everything is flowing to the email and then through to the software. Some of these suppliers like Home Depot and stuff like that, you will be able to get electronic receipts as well. So that can all be automated without your guys even needing to take a picture. But you know, either way works. From there, the financial information, so that's how you get it into the software. From there, it now needs to be tagged to a job and to a cost code. Now, this is where things get super confusing and a lot of it breaks down because people aren't doing it effectively because it's sort of an all or nothing. If you can't do all of your transactions in this way, then your job costing is not going to be effective and you won't know your numbers for job costing, because if 80% of the financial purchases for a project get categorized properly and the other 20% don't, you're going to run a report. It's going to look like you're super profitable because 20% of your expenses are missing, right? So it has to kind of be an all or nothing. That shouldn't scare you from trying to do this or getting started. Reach out to us. This is what we do. We help build out these systems for our clients. We've got this templated and dialed in, and we can just get this into a business really fast. But if you're going to attempt this on your own, my suggestion is at the beginning, just categorize by project. So instead of trying to worry about like how much do we spend on framing, how much do we spend on plumbing or electrical or finishing or whatever, and trying to categorize all your different expenses to the like different cost codes and all of that, just try to do for per project first. So let's just try to get all the expenses for Miss Smith's project, labor hours, subcontractors, materials. That's about it. So if you can just get to that level, at least at the end of the day, okay, we charged Miss Smith 200 grand for her remodel. We spent 120,000 on, cost of goods or what have you sold. So that's the beginning step. If you're already there, then the next step is the cost codes and expense tracking so that you know to the dollar pretty much exactly what you spent for framing materials, and then you can do actuals, actuals to estimated of what do we estimate, what was the actuals, what's the difference, are we accurate, can we adjust, can we do this or that. So you can get really bogged down in here, get started on the projects, move forward with that. From there, the other part of like the financial flow, so that kind of gets your expenses. Now we need the invoicing, right? So the other side of this is that's the money we're spending. We need to be tracking that and getting that into the system properly. Now, what about the money coming in? So for invoicing, you should always increase the frequency, typically to 1 to 2 weeks. I would not want to see invoicing go more than 2 weeks without invoicing a client. Now, this is more on the residential side. I know commercial projects are a little bit more stipulated by the prime contractor or the developer potentially, depending on how the contracts are signed up. But even in that case, you should be kind of fighting for more frequency in invoicing because cash flow, as I'm sure you've seen, if you get a big payment, you get like, I don't know, $200,000 payment for a draw on a project. And it's like, yeah, good. And then you spend a bunch of money, you kind of pay off whatever you need to, send money everywhere. And now a month goes by and you're still like a month or two till the next draw. And you've got to scrape by, you've got to get into debt, you got to, try to manage zero cash flow until the next big milestone comes up. So try to make those milestones closer together and percentages of like completion together instead of maybe doing like at 25, 50, and 75 and then 5% after completion or something like that. Try to do like we want to invoice every 10% of the project so that you've got more times to invoice. Once you've got your frequency set up and the expectation set with the client, with the invoicing, now it's just figuring out that process. So the big thing is you want to take whatever's on the estimate and put that into the invoice. This looks really professional when instead of just doing like invoicing for 50% of completion, right? It's like what's really happening here. If you can take line items from a project, and even if you don't show the client like per line item what the costs are, but if you can like invoicing for 50,000 and that's framing and demo or concrete, whatever it may be, right? So whatever it says in the estimate, pull that through, copy it into the actual invoice, and then send that to the client. Then it's very clear what they're paying for and what they're getting. I'm not going to get into deposits here because that's like outside of the bookkeeping, so to say, but you should be collecting deposits and money up front, whatever it may be early on. And that's pretty much the financial flow is in and out of the system. And with all of this, getting the system set up, start small, pick an area. What's the most pain point for us? Is it like we don't know where our expenses are? We're not doing any tracking. Is it we need to get the software set up properly? Is it we need an SOP in place? So figure out what's a small thing that you can do, get that dialed in, kind of move on to the next one. So talking about moving on to the next one, number 4 here is payroll tracking. So the biggest expense of a construction company is typically payroll. And materials are big, but typically materials are a lot easier to estimate and don't go over as much as payroll. It's very easy to go over by 20, 30, 40% on the amount of hours that guys are spending that you're paying for than it is to go over, 30% on materials. That's very unlikely. Materials, maybe you go over 5, 10% as long as your estimating is decent. Payroll, it's very easy to have guys go over. So payroll tracking super important. And like I mentioned earlier, you can get an app, you can get project management software. There's a whole bunch out there, different ones. Pretty much all the project management software out there, CRM, some people might call them, will have some sort of module where you can track hours and assign them to projects. And it's quite easy once it's set up. You just got to get your guys on board, but essentially they'll be putting their hours in per job and then per cost code. This is pretty easy because the guys on site will be know what they're working on. Was I working on demo today or framing or finished carpentry? They can easily put that into their hours when they put it in. All gets pulled into the system automatically, and you can then run payroll from there. So one thing I like to do as far as implementation of the system, because it's one thing to get this set up and it's another thing for it to work properly. So often, if you're just getting your guys used to doing like using an app to put in their hours and stuff like that, what I like to do is send them a text message, could be a group message or just individually, depending on how many people you got, and just remind everybody, hey, we're gonna run, we need to run payroll by Monday or Tuesday. Can you please, like on a Friday, please make sure that you take an extra 5, 10 minutes today, go through your hours for the last 2 weeks or last week, and ensure that everything is correct, everything is tagged per job, everything's tagged per cost code. And just this simple thing of reminding people at the end of the week to make sure their hours are correct will make your payroll process just that much easier. You don't have to call guys and like, hey, you've only put 4 hours for this day. What's up? Did you leave early? Did you forget to put in your time? To this other day, you forgot. You haven't filled in anything this whole week, so I can't really pay you. So instead of be proactive, send them a heads up ahead of time. Once you've got that dialed in, now you're going to do approval. So you're going to approve the hours. This could be an admin, doesn't have to be you. It could be a project manager if you've got certain project managers for certain people, what have you. But there's some sort of approval process to make sure people are correct with their hours, not missing any or exaggerating, how much they worked and things like that. From there, after approvals, you want to make sure you have direct deposit set up. If you're still paying guys checks, that's just a waste of time, money, and paper. And nobody wants to go to the bank to cash a check. I mean, you've got your phone, you can put it in your phone, but still, direct deposit, send it to them directly through their bank account, and just make it easy for everybody. And then finally is time off. So time off requests is another thing that people often don't know you can do through your bookkeeping software, and the guys can use the app to request time off, and then you can approve it, and then it's in there, and it's automatic within the system. They've asked for this time off, you've approved it, they shouldn't have any hours during that time. Everything is tracked and just very easy once people understand how to do this. So making sense here? It's a lot that goes into financial management, and we're getting to the good stuff here is how do we actually use all this once the system's set up to know what we're doing, right? So I'm going to be talking about number 5 here. This is key financials. And this is something that, as an experienced business owner, if you want to be a savvy business owner, you need to spend more time in your financials. And it's very easy to brush over this. Oh, profit, loss, and this and that, some numbers. I've got money in the bank. Maybe I don't have money in the bank. It's very easy to brush over it and not really pay attention to what's important. When I was running my contracting business, this is something where I was doing bookkeeping. I knew my numbers. I understood, like I could see what was there, but I didn't understand how things related and how to use that information to make decisions and what those numbers should look like. So I'm going to be walking you through that right now. First, big important statement for the key financials is your profit and loss statement. I'm sure you're familiar with these. You've got your top line sales, you've got your cost of goods, you've got your overhead, and then you've got your profit at the bottom. If yours doesn't look like that, you need to talk with your accountant or bookkeeper, most likely your bookkeeper, to set up the books properly, because I see this time and time again, contractors doing millions in sales and their books aren't even like their accounts aren't even set up correctly in their books. They've got labor in their expense categories, like where the overhead should be, and they don't have labor in the cost of goods sold. You need to differentiate your labor between, direct and indirect. So top line sales, very easy. How much income do we make? Million, 2 million, 10 million, 100 million, whatever it is. That's a top, right? Under that, you're gonna have cost of goods sold. Cost of goods sold is subcontractors that you paid, materials that you paid, and hours, labor, internal labor that you paid for employees. But employees who are working on the job site. So this would be project managers. This would be your carpenters, anybody who's working directly on the site. Your admin staff, if you have a marketer, yourself as a salary, that should be in the overhead, which is like the expenses that's below that top portion there. If you're confused about this, drop a comment, let me know. I'll try to explain it better or paint a picture here. But that is very important because you need to know what your overhead is. I'm going to get into that in a second. But your overhead then is all the expenses below that. These are all the indirect costs that are not associated with a project, your insurances, your office staff, cell phone bills, whatever, right? So that all goes in there. Now, you can then take those expenses that you have, and those expenses are your overhead, and you can figure out that as a percentage of your sales. So if you spent, I don't know, we'll just make numbers really easy here, but you spent 100,000 on overhead. That includes maybe your salary or whatever else. You made $1 million in your business. Well, your overhead is 10%. 10% of the money that comes into your business is spent as overhead. Now, the problem with this that a lot of people run into is if you are marking up projects by 20%, you may think that my overhead is 10%, my markup is 20%. That means I've got a 10% profit. That is not the case. That's not how the math works. Unfortunately, you've confused markup on top of sales with overhead, which is a margin of sales. So the margin of overhead is 10%, but a markup is not a margin. And there's a difference. I've got another video explaining this in detail, exactly how to think about this. But essentially, a 25% markup, if you mark up your project 25%, that's only a 20% margin. So if your overhead is running at 15%, that's only leaving you 5% margin, never mind contingency if anything goes wrong or you've estimated improperly. And this is where a lot of contractors can get to an end of a project and like, where'd the money go? Right? I thought I was going to make 200 grand on this project. My bank account's looking slim. We've completed the project. I've got to go now bust my ass to get a new project and bring in a deposit because I got all these people to pay and things like that, right? So understanding this, very important to your overall success. All right, so that's the profit and loss markup, margins, that kind of stuff. Now we're going to move into the balance sheet. So the balance sheet, pretty simple in concept. It's essentially the balance of your business. So your liabilities, which are things that you will need to pay for, debt, things like that. And then you've got your equity, and I forget what the other one is off the top of my head. But essentially, it's the balance of your business, and this is the snapshot of what your business is, worth. It's not what it'd be worth on the market, but what are the assets? Are you in a plus or minus situation as far as overall assets to liabilities in your business? And this is something to the way you need to look at this is like one snapshot. You can get some information from it, but you need to be seeing how it changes over time. So how's our balance sheet changed in the last 6 months or the last year? Are we growing the value of the business, or is it shrinking? And this will alert you to that. All right. So still with me here? The last few things for key financials is cash flow and work in progress. So cash flow, I think most people understand that it's how much cash do we have right now to facilitate what's going on, how's the cash flow going. And that's why I'm saying the frequency of your invoicing needs to get shortened so that your cash flow is more regular. You're still getting paid the same, but instead of having these big increments or these big payments, you're getting smaller payments that are more consistent, and it's easier to run the business that way. With work in progress, this is something that if you're not doing, you should be looking at it because it'll do a number of things. Work in progress will help alert you to maybe dips in production that will happen because if you've got a lot of work in progress that's sort of nearing the end of a project, those projects may be closing out. If you don't have new projects coming up, you're going to have, a drop off dip. But work in progress also lets you sort of know where you are financially better than just bookkeeping because bookkeeping is always sort of looking in the past. That transaction happened, whether it's yesterday or a month ago. You're always kind of looking back with bookkeeping and the financials that are there. With work in progress, you have like a pretty clear indication of like what's happening, like where's things at today and what's going to be in the future. If you've got work in progress and a bunch of projects that are just sort of getting going, you may be, low on cash and your financials don't look great, but you've got all this work lined up and you're maybe at whatever percentage completed of the project, you're going to be getting paid soon. So you can see that things are actually going well. On the inverse side, you may have a pile of cash because you just completed a project or just started some projects, got all these deposits and different things like that. But your work in progress may tell a different story because you've just recently invoiced a whole bunch, but now you've got all this work that you're on the books for that you need to complete. So work in progress helps you understand that picture and kind of look behind the wall of just your bookkeeping. All right, so those are your key financials. That is like the big system, and now these are the last two things that are going to make you rich and make you wealthy. This is so important and so easy. The next one we talk about is the banking. So how do you actually set up your bank accounts and do your banking? And then the seventh point I'm going to get later on is you outside of your business and how you become wealthy even if your business doesn't do well. All right, so number six here is the banking. The banking system that I've had the most success with myself and other clients is the Profit First banking system. It's a book by Mike Calluses, and essentially the beauty of it is it's very easy yet very powerful and impactful. Essentially, what you want to be doing is you have an income account, so all the money from your business goes into your income account. So you got checks from whoever, you're getting payments, it's all just getting going into your one bank account that's for income. All money goes into there. From there, it's then going to get allocated to your other bank accounts. You're going to have at least four, you could have more other bank accounts. And the four other bank accounts you need is your profit account, profit first. So you're generally going to allocate maybe 2, 3, 4, 5% of all the money that comes in to that account. You'll just do a simple calculation. We've got spreadsheets and ways to organize all this. If you need help with this, definitely reach out to us. There are links in the description below to get free courses on how to systematize your business, how to implement all this stuff. Because the system's one thing, implementing it and getting all the different systems and the whole process of the business working together, whole nother ball game, whole nother story. That's where we come in and help. So you got a profit account. The next one you're going to have is your operating expenses. So this is your whatever you pay for your business, subs, salary, hours, materials, everything goes out of the operating expense account. So this is going to be your highest allocation. Could be 60%, maybe even up to 70% of money that comes into your business goes into your operating expense account. The other one is going to be an owner's draw account. So this is where you would typically pay either the partners in your organization if you've got other people or shareholders, but most likely you're going to be paying yourself from that account. Now if you are salary and you pay yourself through payroll, then that would typically come through the operating expense account, and the owner's draw account may not be necessary, but depends on how you pay yourself. The fourth account and final account, probably one of the most important accounts, is your tax account. So if you pay like income tax, sales tax, whatever kind of government taxes you may pay, you need to be putting a percentage of your revenue into that account. That way, when you get to the end of the year, you're not like, oh, I've got this tax bill of 50 grand that I've got to come up with. I don't have that. I've got like 20 grand in my bank account. Now I've got to somehow figure out how to run my business and come up with 30 grand to pay the government or whatever, right? So put a percentage, could be 5, 10% of your revenue goes into your tax account. You're going to have to figure out, for yourself and your location and size of your business and all that stuff. But you're going to be taking a percentage of revenue and putting it away for taxes. And that way you've always got money to pay taxes. And now you've got your money distributed across these accounts. If you start to run low in one account, you know that something your allocations are out, something's not running properly in your business, and this is a way of kind of budgeting your money without having to run an actual budget, and it'll help alert you to deficiencies in your business and make sure you're using money in the way that it's intended and not using money for one part of your business that you don't have and then not having money for another part of your business. So is that making sense? The other thing I'm going to mention about banking that's super important is you should have 6 months of overhead and salary as like a contingency. So you may have even another bank account that could be the owner's draw account or like a contingency account. But after a while, after you've been in business, like me, I've been doing this for over 15 years in business and 20 years owning some sort of company. You start to see these cycles. And no matter how good you are or how great your business is or how long it's been around, there always comes times when there's a recession, something comes up, maybe a key person, quits, or money's just tight or you make a mistake somewhere, some sort of legal thing comes up, have a contingency of at least 6 months of your overhead. So if your overhead is 10,000 per month, you should have a bank account with at least $60,000 in it to cover your overhead if things get slow, if something happens, if for whatever reason. And then also your own salary. Your own salary would be if you pay yourself 10,000 per month, then you'd have another 60,000. So it's 120,000 set aside for contingency so that no matter what happens in your business, you've got this pool of cash that you can rely on to help get you through those tough times or those issues or mistakes that come up that are just inevitable and they happen in every business. And this is where a lot of people go bankrupt because they don't have any contingency, they don't have any rainy day savings. The business starts to slow down, or they had a really bad job or bad client, or something happens. And because you're running on redline so much, you are just in a really weak financial state of your business. And now you've got to start looking at, selling things or taking on a bunch of stupid debt and all this stuff. And it can go sideways really quick. So those are the big things as far as the banking side of the business goes. Now, moving on to number 7. So this is how you get rich. This is how you get wealthy. And this is all about you personally. So your business, we've set that up. We've got the bookkeeping system. We got the financial system in place. Now you yourself need to be like a business, and you yourself need to set up your own finances and budgeting and wealth building in a way that makes sure that even if the business goes south or something happens with the business, or you need to walk away or take a step back or whatever, that you are covered and you're in a good place. So with your personal budgeting and wealth building, you should be taking profits out of the business and putting them in long-term investments. What those are is up to you. Could be stocks, could be real estate, whatever it is. Something ideally safe with a fairly high return that's going to compound over time. You should also be doing personal bookkeeping. So this is something that opened my eyes when I started doing it. I was doing bookkeeping for my company for a long time. I had someone doing bookkeeping for me. I knew the financials there, but I didn't do my own, bookkeeping with my personal stuff. But once you start doing that, you start to see how much you spend every month. You can much better kind of, again, what gets tracked gets improved. So I would suggest get your personal bookkeeping. It's a lot easier than the business, and it'll help you realize how much you're spending every month and help you live within your means. It's very easy to get wealthy. The concept, anyways, is you just you make more than you spend, right? And if you can keep 20% of your income and put it into investments, you're going to be wealthy. It's inevitable. The problem is so few people are able to manage that and have the habit and the determination or discipline to not overspend or to go, buy that new truck, buy the new house, go on vacation, all this stuff, which you should be doing, definitely, but you should be making sure that your income is always higher by at least 15 to 20% over what your expenses are monthly, as your personal expenses for you, your family, whatever. So making sense? This is the way that you can set up your entire financial system, and it'll give you this like breath of fresh air when you know you're covered, you're in a good place, no matter what happens, money's flowing, you can see it, and it's going into your bank account. I'll see you on the next video.